All right, so welcome to lesson 9. We are going to be going over counter trend trades, okay? Or also known as reversal trading. So, reversal trading has a lot of potential, but it's very, very high risk, okay? I'm just going to go ahead and put that in bold. We are high risk trading here, okay? And I don't recommend you take these unless you know what you're doing and unless you get your signals. So I'm gonna teach you guys today on how to identify a reversal trade. So, what is a counter trend trade? Pretty self-explanatory, but a counter trend trade is trading against the trend. Trading against the trend of the market. So, if the market is bullish, we are going to be selling. And if the market is bearish, we are going to be buying. So pretty much goes against anything that I've taught you up to this point. But reversal trading has a lot of potential, but is very, very risky. I've caught some counter trend trades that have done very well and have performed great, but I don't recommend taking them. I don't recommend taking every single counter trend trade you see or every single setup you see. Good example of a counter trend trade that is potentially still playing out. I am anticipating this move next week. However, it has already given me the signals that I need to know that I don't want to be buying in this bullish market. I want to be selling in this bullish market if I were to take this counter trend trade. So, as you can see, we're in the daily time frame and we are very bullish. Very bullish. What I look for is if are we overdue a retracement? Are we overdue a retracement? And I would say yes, absolutely. As you can see, we have 1, 2, 3, 4, 5, 6, 7 doji there. 7, we'll say 7 bullish candlesticks. Same thing over here. We have 1, 2, 3, 4, 5, 6. There's a little red one in between, but so 6 over here. We were overdue a retracement. We got 7 over here. So more than likely we are overdue a retracement. Just meaning price has not pulled back in quite some time. And what does the market do? It does break, retest, break, retest, break, retest, creating like creating a little staircase. That's what the market does. It needs to pull back, it needs to breathe so that the trend can continue. So, first thing we want to do is we want to mark our area of interest. Mark area of interest. So as you can see here, we have 1, 2, 3, 4. I'll just count that. It's 3, 4, 5, 6, 7. So we have about 7 touches, and that's not including what's underneath. You know, I mean, we've seen. Look, I'll even count here too. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9. I'll count. This is 8, 9, 10, as you can see, we're having a reaction at this area. You could count this even as 11. We had this little pullback right here. So I'm seeing 11 touches in the daily time frame at this area. So this area is a very well respected area of interest. And it's also a daily area of interest and also a weekly area of interest. As you can see, we got 1, 2, 3, 4, 5 taps, and then we acted as resistance a little bit right here. So we've got 5 taps on the weekly time frame. Kind of go back in time a little bit here. So since we are bullish, I think we are personally overdue a retracement since we have all of these candlesticks going to the upside. So what I'm waiting for here is to see some reaction at this area of interest. So I am now waiting for reaction at this area of interest. Okay? So let's see if we get some reaction. We do. The reaction here that I see is this little evening star pattern, which is a reversal pattern. And we are what? Reversal trading. So I highly encourage you to, if you are going to take a reversal trade, wait for a reversal pattern, whether that be a head and shoulders pattern at an area of interest or a double top pattern at an area of interest or a double bottom pattern. I highly recommend you have a reversal pattern at your area of interest. We have this little evening star pattern. Another giveaway that we are now retracing is this big bearish wick. So we came up and rejected. Price rejected this price up here. So now what I'm going to be waiting for is I'm going to be waiting for price to break below this area of interest. Even though we are still bullish, I'm going to be waiting for it to break below this area of interest, because still, if we are below the area of interest, I want to be selling. If we are above, I want to be buying. So even though we are still bullish, I want to make sure that we are below this area of interest. And we are. So we broke right here. Now what I'm anticipating is a pullback to this area of interest. Remember, that's where you want to make sure that you are getting in. That's where you want to snipe your trades, or the pullbacks into the area of interest. And we do. Perfect. Right here. So we get our short position ready. Target this next area of interest down here. We got in. Let's say we got in on our pullback right here. Okay. Price came back down, came up, almost took us out. But what do we have? We have a very healthy stop loss. Always make sure that your stop loss is above the previous. Is above the previous structure point. I could actually raise this up a little bit, but I made sure it was above this area right here. But you could raise that up a little bit. We didn't get taken out. It was close. There was a news event actually in the euro. So at our area of interest. Now, what I'm anticipating for this upcoming week is that price probably comes back, might retest this little double top here, and then we'll get our shift of structure on our lower time frames. But you also need to make sure that you are getting in. If you are reversal trading, make sure that you are getting your shift of structure in your lower time frames. As you can see, the shift happened right here. But I see this platform kind of forming right here, so I want to make sure that I'm below this area because it's rejected. It's been used as support and resistance so much, so I want to make sure that we're below this area. So I could assume that price, because this is such a volatile pair, is going to come up, retest that double top, create that weekly wick, then come back down, retest, and then continue to the downside, because we have been at this area and rejected it so many times. So mark areas of interest, wait for your reactions at this area of interest, and then make sure your lower time frames shift in the direction you are anticipating. Meaning the 30-minute and or the 1 hour. So kind of up to you. If both of them do, all better. But sometimes I'll just wait for that 30-minute shift, hop in there, and then we're typically good to go. But yeah, so this is what I anticipate for this upcoming week. Little pullback, retest this structure point here, come back down, break below this area of interest again, retest, then continue to the downside, giving us the full move of the market. So that's what we are anticipating. And if I might take this counter trend trade this week, it is high risk. So just know that you are high risk trading when doing this, but you can still get your confluences and you can still mark off your confluences, your 30-minute shift of structure, your 1 hour, still making sure that you're getting your sniper entry at your pullback of the area of interest. So just to kind of go over a few patterns that kind of indicate patterns that indicate that we're reversing, that price is reversing, patterns that indicate reversal. Number one, head and shoulders. Number two, inverted head and shoulders. Number three, good old double top. Number four, double bottom. And you can get two patterns in the area of interest. It's not the prettiest double top, but price definitely rejected this area right here, as you can see. It's big wick and then came right back down. So there's one pattern that we can use here at the area of interest. And then another one we can use is our little evening star here. That's a reversal pattern just on the lower time frame. So the more patterns you have, the better it's going to be. If you have a weekly area of interest, if you're at a weekly area of interest and you have a daily head and shoulders, that's great. And then you're using your 4 hours as well to indicate that, okay, are we going to the downside? Yes. Well, look at this. We've got a little evening star pattern right here. What happened? We came to the downside, then we just waited for a pullback. We got in on this pullback. News event came up, boom, tried to take us out, but it did not because we have a sufficient stop loss and it's placed above all the other traders in the world. Okay? So that is one thing that I love about having a big stop loss. You don't get taken out near as much as everybody in the world. Everybody else is having these big liquidity sweeps, getting taken out because their stop losses are too tight. Ours is big. Bigger is better. But yes, look for these patterns and have a sufficient stop loss, especially on a counter trend trade. Have a sufficient stop loss because these are high risk and price is going to do its thing. Price is going to go up and down. And oftentimes, when you're having a counter trend trade, you are going to go into drawdown sometimes. But that is okay because we have a sufficient stop loss. And if we get taken out, we are completely wrong about the trade because our stop loss is so high. If we get taken out, it is what it is, right? We can move, we just move on to the next trade. So yes, you can have more than one pattern at an area of interest. Look for reversal patterns at the area of interest. We're gonna get these. And then of course you've got your evening star and morning star patterns. So I'm just going to make a list right here so you guys can screenshot what exactly you're looking for so you can check the boxes off if you are reversal trading. So number one is going to be to identify strong area of interest. Two, wait for price to reach area of interest. Three, look for reaction, which is your rejection candlesticks. I'm just going to say rejection candlesticks, typically on the one. Four, look for confirmations. For example, patterns, reversal pattern, reversal patterns at area of interest. Five, wait, also SOS's, shift of structure at in 30-minute and 1 hour time frame. Enter after confirmations. Six, set healthy stop loss. And of course, realistic take profit. Okay. So that is what you need to be looking for in order to enter a counter trend trade. So I've pretty much got everything I need to enter this trade. I'm going to wait for the market to create that weekly wick on Monday, Tuesday, whatever, however long it takes. And then I'm going to wait for that break, get in on that retest, and then enter the trade here, wait for my confirmation, make sure we're bearish in the 30-minute and the 1 hour, because I am trading bearish, but my overall time frames are bullish. And then I'm going to enter the trade if everything makes sense. I hope that makes sense. Again, this is very high risk trading, but no risk, no Lamborghini, right? So yes, this is how you trade against the trend. This is how you catch the reversals, but that's it. It's really that simple, guys. I mean, along with trading, just regular trading, it really is that simple. And I have found that I have found that giving yourself a healthy stop loss makes you money in the long run, makes you way more money in the long run. And also, I have found that putting your stops at break even, especially when swing trading, helps you a lot with protecting your capital, especially at the beginning, because at the beginning, you need all the capital you can get. You know, You're going to be having, you're going to be learning by trial and error. I'm giving you the playbook, the checklist, and everything that you need to succeed in trading. But the experience comes with getting in your chart time, entering trades, seeing that these patterns actually work, gaining that confidence in yourself is something that I can't teach, but I can show. I can show by my results, and I can show by by these patterns and this strategy. But the chart time is up to you. The more time that you put into trading, the more you will learn, the more educated you will be. And education in the markets is very, very powerful, because the more experience you have in the markets, the better you are going to see the markets. I'm going to say this too, right here. Learn from mistakes. But just know that you have to learn from your mistakes in trading. If you don't learn from your mistakes, you're just going to keep making the same mistakes over and over again. If you get taken out of the market, ask yourself why. Did I place my stops high enough? Are all of my time frames bullish? Are all of my time frames bearish? Did I take a risky entry? Did I take a counter trend trade? Trading is very, very, very possible. And you guys are on the right track. You are. And you are going to make it. That's it. As long as you don't give up, you're going to make it. It's inevitable. You can't lose when you don't give up. But I hope you guys enjoyed this. We are now going to be jumping into lesson 10. See you there.